China has been the success story of the 21st century, gobbling up garbage debt from countries all around the world, amounting to trillions of dollars. We've watched as China sleeps comfortably on a pile of paper IOUs, despite knowing these will one day be worth absolutely nothing. Everything seems to be changing, however, as we see increased volatility and fear entrench investors, causing a fleeing from banking establishments into more sound investments, or, for the non-sophisticated person, a mattress. Buckle your seatbelts. The near future will be a time which makes history. Frightening history. You came here for the truth, so let me unveil that for you. Today we will get into China's growth falling below 7%. Now, some would say falling below 7% is still a very high number. Compare that to the Eurozone, compare that to the US, Canada, the UK, Australia, and you have obviously a different picture. Let's get into that in a moment. First, we'll look at Alan Greenspan, one of the few, now that he's not as the chairman anymore, actually saying some good things. Former Fed chairman said Thursday that monetary policy has reached the outward bounds of its effectiveness without another round of quantitative easing. What have I said over and over again? That without additional monetary easing, printing money, they're not going to be able to push the stock market up. You can see the direct correlation between the S&P and the Fed's balance sheet. Sure, day to day it may not match up, but you look at the chart over the past few years and you see it. It's completely accurate. Monetary policy has done everything it can unless you want to put additional QEs on. They're not helping that much in the sense that ultimately determines whether or not you're going to get an effect from the QEs beyond increasing price-to-earnings ratios in the stock market, he said during an interview. There's no real evidence that we're getting an impact on lending and the economy picking up. And this is clear. We've seen this. But it's Alan Greenspan who has to point it out before others in the investment world start to really believe it. And then we get into the information about China here. CNBC, the world's second largest economy, expanded 6.7% on year in the first quarter, slightly slower than the previous quarter's 6.8% pace. What we have to remember is this is previously its slowest pace in 25 years at 6.9% growth. So the growth is declining, marginally, of course, but declining. Now, they predicted it would be between 6.5 to 7%. And they're saying, hey, look, we're still within our growth expectations. So it doesn't matter how low it goes as long as it's within expectations. That's what I always say. And although that doesn't make sense, that's, just the way it is. So what I would like to note from this is that nobody would agree that it was going to go below 7%. Everybody said, and I should say some people, had said that it will not go below 7%. But as soon as they develop a consensus saying that, it'll stay between 6.5 and 7. And that there is somehow enough to make the market happy. I mean, it doesn't make any sense to me, but it's just the way it is. So note that this was predicted initially not to go below 7. Now it's below 7, but that's okay, even though that's the slowest pace in 25 years. What I would suggest is that, look, China is going to grow. Chinese are going to move from the rural areas into the big cities. We're going to have a bigger demand on commodities in the long term. Commodities, food. We're looking at food and energy prices increasing at some point. Different alternative energies may rise and everything, but more people, basically more consumption. That's just the way it is. Things change over time. There's not necessarily the biggest market for radios as there was in the 1950s, let's say, and now televisions have a bigger market, and now there's bigger market for cell phones than there were back in the 50s, for example. So things change over time. Obviously, as new technologies are created, you have new demand created as well. So this is how we have to sort of play it out. It's not like you can say 100 years from now what we're going to be able to have. There are things that haven't been developed yet. So anyway, that's all I wanted to get to for that. Lagarde from the IMF also said that they were concerned about China following through on the restructuring of its struggling state-owned enterprises as the country shifts to slower, more sustainable growth driven by consumer spending. That would be a great thing if the consumers would spend. However, we do see that even this has been slowing down, and they've been relaxing the lending standards, and yet similarly to what we see in other places in the world, it's really slowing down. They talk about the devaluation of the yuan. They talk about a lot of things here about the currency. I'll move on from this just to basically get into this, but they talk a lot about the struggles that China is having, and this is the IMF talking here. Look at this. When we see oil prices, which had declined significantly over the past, let's say, year and a half or so, and then you have them more recently coming up in price. This right here, and I should mention, the reason why they said that the prices were going down was because of this magical surplus that formed overnight. The International Energy Agency says the global oil surplus will start fading in the second half. Now, that's a significant decline if you see that between the second quarter and the third quarter. I don't know where they get these numbers all of a sudden. I mean, it's just ridiculous. Are they expecting the economy to start doing well in the third quarter? Is that what's happening here? All I have to say is that these whole surplus numbers, you never know what's accurate. The inventory numbers couldn't have possibly have just changed so quickly, so dramatically. And they blame it on shale, fracking. They blame it on everything else. But it doesn't tell me the truth as far as I'm concerned. There are other forces at play, and that exists in the financial realm. BlackRock, right here, said it's going to cut 400 jobs and take a $76 million restructuring charge after posting a 20% drop in its first quarter profit amid a dramatic reversal in financial markets. So this is not the only company that's doing this. I need to do an entire video just outlining all the layoffs that we're seeing around the globe right now. There are countless companies laying people off. It's not as big as it was necessarily in the financial crisis, but it doesn't seem to be related to any particular sector. And also at the same time, we see this taking place geographically all across. So we have to be concerned about this because this is the same signs, same warning signs that we've had only a few years ago. Now, Miami's real estate prices have declined or begun to decline significantly, they suggest, on the higher end in particular. And what's important to note about Miami is that, and I wrote about it in my book, it's important to watch the property values in Florida, according to James Kenneth Galbraith, amazing author. He states that the lead of the trend of a downward because Florida is generally seen as a vacation state. People will abandon their vacation home quickly in the event of a downturn. This is clearly evident with nearly 20% vacancy rates after the financial crisis. So you need to understand that. So with Miami's prices coming down, this is something that we need to watch closely on. Now, Venezuela, serious issues, covering it here all the time. Look at this. Their electricity rationing would be imposed on 15 shopping malls, and drought-hit Venezuela time zone would be modified to save power. I mean, they're pulling out all the stops right here. You have real people suffering, 29 million, and you have water and electricity cuts as the levels recede at the dam, and, that's providing them their power, it's providing them necessary energy that they need. Right away, whenever you give too much power to any corporation, individual, government, whatever it is, eventually that is squandered or it's mishandled or whatever. But to me, this goes to show you how important it is to be self-sufficient. If these individuals could somehow, and I'm not suggesting that these people would be able to do it, but if they were able to afford the solar panels and the ability to have their own water supply, whether that's through a spring that seems to be coming out of the ground offering free water or anything else. These people may be totally fine. Now, if you go to any developing nation, what I have found, I've been to many, what I have found is oftentimes these individuals have their own gardens. It may be a small garden, but it is seen consistently that they have their own gardens, growing their own food. They want to be at least somewhat self-sufficient. And all they have, if it's in a little apartment, you'll see them growing things on their balcony or on their doorstep, growing little things, because it's their way of doing things to prepare to have this sort of, ability to fend for themselves. So, you may not be in the situation that Venezuela is, but you can use this as a crystal ball to be able to prepare in advance. People are always asking me and trying to deny, there's no collapse, all right, buddy? You're ridiculous, fearmongerer. I hate you. You're stupid. And all this silliness. It's sort of comical, I guess. They're trying to be funny in a way, but when you really think about it, did the people in Venezuela predict this to happen? And if they did, wouldn't they try to scrounge up some money, maybe to buy some solar panels, or maybe put that garden in their backyard, or, have a water supply planned out? No, these people are lined up because their food is all rationed. Everything is basically taken advantage of in a way by the government and everything else. So this is my warning to everybody. I mean, I know that 95% of the people watching here totally get what I'm saying. So I appreciate that. Consumers have been the missing link in the U.S. economic recovery and are likely to remain so absent of a major change in sentiment. This is important to note because consumer confidence is down. They try to spin it every time it ticks up by 0.00001%. They report it in the news, and they don't mention the percentage, of course, but they'll say, look, the consumer confidence is the highest it's been in so long. It's doing so great. But the truth is that it's not doing great. And when we look at the numbers, we see the truth. That's all I wanted to mention for that. And just a little fun statistic. CEOs paid $30 million or more. $30 million in the last fiscal year. We're looking at Viacom, Oracle, Disney, Medtronic, General Growth, Comcast, Honeywell, Salesforce, GE, and Discovery Communications. What we're looking at here is individuals who are paid excessively high amounts. And these are the individuals which get all the tax loopholes. They don't pay taxes, none of these, or very low taxes. They are able to keep their money overseas. They're able to get all the tax loopholes. They're able to have their people in the highest positions of power of government. They are able to get all the bailouts. It's a joke the way this all works. They're conglomerates, all owned by each other. And what we have here is a dangerous situation because these people own and control the governments. They make the decisions. They are the ones who own you and I, whether you like it or not. If you found this video informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you will find my book, The Money GPS, even more informative. If you want to look through my book, just head over to Amazon. You can flip through the book. Over there, they have a look inside feature. It allows you to flip through the pages of the book to see if you like it. Take care.